Hey, there's a couple things in this market that if you knew, you would be a better trader instantly. No cap. It's a couple things I ain't even know, back in the day that I wish I knew sooner. So I'm about to show y'all that right now. Let's go. All right, y'all. So we got the charts pulled up, man. This is Sway Broker. If you don't got one, go on get one. Best thing going. You can get it in the description below. All right, this one right here is equivalent to MT4, MT5, actually way better. The other one, they do have a Sway charts that's equivalent to TradingView. So if you like TradingView better, you can use that one. I like using this one because I'm used to MT4, MT5. All right, so number one, when you're on here, you need you some period separators. All right, that was one thing that, hey, if I knew this, it'd be a wrap. And I'm gonna show you why. All right, so if you don't have period separators on your chart, let me show you. So you come here to this icon right here, you click that, you go to add indicator, okay? Then you want to just type in period separator and you'll see it right there. Hit that star, or you can just click it directly, okay? Now, when I'm trading Forex, I got about three indicators on my chart. All right, I got a 200 SMA moving average or EMA, doesn't matter, or a 20 and a 20 moving average SMA. And then I have my stochastic oscillator, which I changed the levels to 92 and 6. Okay. Now, these period separators that we added is going to separate the days. So you'll know what day is what. All right. It's going to separate the market by each day. The reason why this is important is because you can see the high and the low of each day. And why is that significant? Is because the market always either tries to make a new high or a new low the next day. Okay, so I'll give you an example. The high of this day right here, which was what, was that October 1st? This was the high of this day. Okay, and then the low. So you can always mark up the high and the low. Next day, what happened? All right, so this is the next day. This is market open. Market came up a little bit, tried to go down and break the previous low from yesterday, and it couldn't. So what does that tell me? Time to buy. You know what I'm saying? It couldn't break it. Time to buy. Boom. So where is it going? If you want to know where it's going, check out the next high. The high from yesterday. It wants to pass it, and that's what it did. Literally went past the high of yesterday, broke it. Okay, the next day opened up, which was today, went higher than the previous high of this day, which lets me know, hey, we coming down, oh baby, right? Stochastic was high. We looking for that good old droppy. All right, now, where could we possibly be going if this decides to pull back and come down? Then we're gonna try to break the low of yesterday, which was this. If we break lower than that, we're going to break the low of the previous few days. Okay? So that's what I'm looking at each day. All right, now that's one. That's one thing you can do. Another thing you can do, okay, is you can go find the high and the low of the London session. So that way when New York session opens up, you already know, you already got direction on what you're trying to do. Okay? So for instance, if I go to this pencil icon, I grab me a horizontal line. Now you may have to go to start drawing. Yeah, you have to go to start drawing. And I recommend getting these three: horizontal line, rectangle, and a vertical line. So you just type one of those in, hit the start, and it'll be right there at the top, right here at the top when you get yours. All right, I use these vertical lines and I pull back. So let's pull back. And notice as I'm pulling back, you'll see this time down here. See my little blue shadow box right here. You'll see this time start to change. And I'm going back to 3 in the morning because that's London session. I go back to 3 in the morning. Okay. So I'm almost there. That's about 3:07. That'll work. And then I will duplicate this. So I'll right click, hit clone, and then I'll move this one over to 7 a.m., which is New York session. All right, so we move that to about 7 a.m. right there. Boom. Now I go to the time frame that I'm going to trade, which is M15. Okay, because I trade New York session, so that's when 7 o'clock. That's when I'm up. So now I got my window. Okay, from 3 to 7. So what you can do now is you can mark up the high of the London session and pretty much the low, which is probably about right in here or right in here. The high and the low. Okay, so New York session opened up and it decided to start dropping. And I told you it's gonna either try to break the low of London session or it's gonna try to break the high of London session. Okay, so it already came out dropped straight past the low of London session. Okay, pulled back, kept going. My little circle that got a little too big for me, but it pulled back, kept going, and it kept going. Now, again, if you have, because one thing it could do real quick is it could have came down and then broke the high. Usually after the high, it then drops. Usually after the low, it then goes up. But it just depends because that's why you want to have both marked up. You can have the London session marked up through New York, and then you can have the using the period separators, have the daily high and the daily low. And that's going to give you a whole lot of direction in these charts. Now, again, I'm still using my 20 and 200, as confirmations on my trades. So normally I'm entering trades whenever, let's say we got an uptrend, whenever that 20 and that 200, they ain't got to cross, but whenever the candles are above both, I'm waiting on that pullback. And then my entries are here, right? And I actually got a system that does that for you, that tells you exactly, when this happens. You can get that in the description below as well. So I do have that, but it ain't mandatory. Again, you can look at this manually. All right, so those are the type of entries I'm looking for. But again, if you have the high and the low, you'll be good to go. So let me go back here to the 1 hour. I'm just gonna click on a different pair so I can kind of show you. Let's click on Euro USD. All right, now let's look at, so this is today right here. This was yesterday. So let's look at yesterday's high and yesterday's low. What did the market do? Broke the low. Went up, retested, came back down for a newer low. Okay? And if you just continue to look, the day before that, high, low. What did this day do? Broke the low. You see what I'm saying? So that's why these period separators are important. It just show you the days. Because if you got a high and a low of the day, chances are, if the market is trending in that direction and it's trying to go there, chances are it's going to try to break it. Break that low or break that high. You see what I'm saying? So again, right here, this is a good example of what could happen on this day. This was the high and this was the low of this day. The market came out, pulled back here, right here. It didn't break the low or it didn't break this one. Shot up and broke the high, right? So sometimes you'll have a small break. It broke the high and then dropped. One indication that it was going to drop, stochastic was high. All right, stochastic was high. So now we got that full drop down. Boom. So we did break the high. Sometimes it'll break the high and keep going. A lot of times it'll break it just a little bit. So you can see this right here and this right here are not too far away from each other. Okay, that was just a little break. It just wanted to break the high, get a new high, and then drop. So a lot of the times that's what happens, and you can look at that on any pair that you look at. Let's go to NAS 100 for those of you who love trading NAS. All right, now sometimes it can get a little choppy. All right, so let's take a peek at where we're at. So this was the low of yesterday and the high of yesterday. And what did today do? Broke it. You see what I'm saying? Broke it a little bit, then dropped. Now it's starting to try to rise back up a little bit more. This is the low. So eventually, the low will get broken eventually. You know what I mean? And you can just always go back. Look, high, low. The next day, it came through, broke the low by a hair before the next day. You know what I'm saying? This is more of a choppy market, so I wouldn't really I'll stay out of the choppy markets. Let's go look at gold. Let's take a peek at gold. See if the pattern still stands. All right. High. About the lowest point here. This one didn't get broken. Unless this is the low. Unless they count this as the low. If they're counting this as the low, which they probably are, then it came back and got retested. But that was about it on that particular one. High and the low. Yep, the low was broken right here. Boom. So that means you can catch a lot of good pips. And I'm telling you, if you do it that way, and you do it the way of looking at the beginning, like what I did right here with these two, looking at 3 o'clock and 7 o'clock, man, game time. So let me see if I can go to the N15 right quick so I can show you that. All right, so let's say this was pretty much the high of the London session and the low of the London session. Okay, so let's say New York opens up and you see the market, it broke the low. So sometimes I told you right after they break the low, they might shoot the market up. Okay, they're gonna try to pass this level. It didn't. And then it dropped. Broke past this previous low here and that one and went off for the drop. Now again, I'm always looking at when the candles are above or below both. So as soon as they cross below here, I'm entering my sell and I'm scalping and getting up out of there. You see what I'm saying? So if you want to do it this way or the other way or both, right? You can have these two on here, your 3 a.m. and your 7. And you can have, if you use your horizontal lines, you can mark up the top. And then let's say I right click, clone that, drag another one down for the bottom. And that'll kind of give you a reference point on what we're doing. If we break a new low, chances are you're gonna get another buy. Another thing to look at would be the stochastic, okay? So we broke past this low. Stochastic was low, letting me know that the buy is coming, because sometimes I told you they'll peak below just a little bit just to make a new low, and then they'll shoot it right back in the opposite direction, which is what happened here. So this would have been a good trade to get in. Now, other trades that I get in, of course, is once it crosses above the 200 and the 20, I'm there. Stop loss here, I'm buying up, money bags. You know what I'm saying? Or if I'm doing a different strategy, I might buy at the bottom of here. Wait on that pullback, that could be another entry. And then if you wanted to do the 2200 move right here, that's another entry. That's 3 entries if, that's how you wanted to do that. Okay? So, with that being said, hopefully this video right here gives you insight on what you can do with knowing the high and the low of the day or the high and the low of London session. That way, once you go into New York, if you do trade New York, you're good to go. In the same way as if you trade London, you want to do that with the, the Asian session. Or you could do it with the previous day. You know what I mean? That way you'll know high and low, because the market is always gonna try to go past the previous high or past the previous low. Okay? So just keep that in mind. Lord willing, I will see y'all in another video. Peace.